The S&P 500 has been very strong compared to QQQ. QQQ's NASDAQ. And the reason why is because QQQ is showing a lot of rotation outflow from tech and into other sectors. The sectors that are getting a lot of rotation, the portfolios that are getting a lot of rotation are IWM, which are the small cap uh, Russell 2000 small cap, and we can see that the Russell 2000 closed very strong. A lot of buyers in the last 3 days, and we are above the 70% melt-up operation, which tells us that there's a good chance we may reach 220 and then peak there for the short, pull back down to perhaps filling that and then seeing more upside. Thoughts on IWM? I think it will get more upside heading into tomorrow. And another portfolio, another ETF that was also propelling the markets higher was the Dow Jones Industrials. The Dow Jones Industrials is doing really well, breaking out of this bullish ascending formation. And we can see the last 4 days, we have seen significant volume with the RSI getting above 70%. So why do I keep mentioning RSI getting above 70%? This is because when the RSI gets above 70%, within my strategy, that triggers what is known as a melt-up operation. And this is what a melt-up operation looks like. We can see the same soda candles here, the same indecisive candles, but because the RSI was above 70%, that led to some massive candles in the following week. So NASDAQ, the Dow Jones Industrials, and we can also look at the Dow Jones within the S&P as well. So far breaking out. So now going back and looking at SPY and looking at QQQ, the reason why SPY is selling off but QQQ is not is because the reason why QQQ is selling off but SPY is holding up is because SPY still has industrials in its sectors. It still has banks in its sectors, and it has energy. Whereas QQQ is mostly dominated by tech that doesn't have the banks and also doesn't have the energy. A lot of the energy stocks that are within the energy sector. So if we look at the SPDR sectors, which are the S&P 500 sectors, the 11 sectors of the economy. XLE, which is energy, was showing a lot of strength today. We held this breakout of the downtrend, as we can see on the daily time frame. And so far, we retested resistance. We did break the resistance at 92, but bulls did sell off into the last minute. Now, heading into tomorrow's trading session, especially seeing that volume is increasing on the energy sector, we can see more upside in these stocks here: XOM, CVX, EOG, SLB, COP, PSX, MPC. MPC is actually a good one. I've been watching MPC. I really would have loved to see a retest of this smart money demand zone, but we didn't get it. So it still does show some weakness, but if we can get a retest at this smart money zone, I'll be very happy to pick up some MPC calls. But so far, energy is showing strength. Another sector of the economy that was showing a lot of strength was banks. I've been stressing banks to our team, to my team, and so far, this is looking beautiful. We got a massive breakout with the RSI piercing above 70%, also signifying that this sector is going to get a melt-up operation with another green day tomorrow. So the stocks that are within this sector that can see upside are JPM, V, MA, BAC, WFC, GS, AXP, and so forth. Now, our team, one of our admins had us on JPM and made some amazing profits, over 60% profit in a single day from this JPM overnight swing trade. So amazing trade on JPM. Although it is a January 17 expiration, we ended up getting 60%, 50% profit on that trade there. Really, really nice on this sector rotation. So over the last 2 days, I've been telling our team that rotation will be flowing from XLK, which is the technology sector, to XLV, XLF, and also XLE. Now, something interesting happened today. XLV was actually down. XLV did not do so well. We did make a new all-time high. We did place a historic all-time high on XLV, but did sell off. So despite the sell-off, we are still holding above the 147.6 breakout. And as long as we hold above this 147 breakout heading into the next 2 weeks, this can continue to see more expansion to the upside on this breakout. So this can take the XLV sector higher, and I think the rotation will flow out of tech and into this sector. So let's take a look at the stocks that are in the sector. We got LLY, UNH, J&J, MRK, ABBV, TMO, ABT, AMGN. So if we look at some of these stocks here, they have been performing really well. AMGN has been performing greatly, and although we did sell off slightly today, bulls still have the upper hand because they're above the 70% melt up operation, which means whenever this sector does get any sort of rotation, it is going to break out heavily and trigger major upside. So I'm watching the healthcare sector. I'm watching banking sector and energy sector for more upside. Oh, I also want to mention that XLI. So the reason why XLI, the industrial sector, is showing a lot of strength is because if we go to analyze and look at the stocks that are in XLI, GE, Caterpillar, Uber, UNP, HON, RTX, ETN, BA, UPS, LMT, a lot of these stocks are part of the Dow Jones, which is what is propelling the market higher over the last week. The Dow Jones is showing strength while tech is coming down. So this means that rotation is flowing out of tech and flowing into the other sectors. And where did this rotation start? This rotation began on the very day. QQQ printed a massive bearish supply bar on the very day that we got the low PPI data. And the reason why this rotation took place is because QQQ has been going up nonstop over the last 16 months, while you got the Dow Jones Industrial. So we can look at the Dow Jones here. Over the last 6 months here, we have been going sideways mostly, and been rejecting this resistance at the 400, and we finally broke that resistance at 400. Same with IWM. IWM had also been flat over the last 6 months, and finally we are seeing a breakout as we get rotation flowing into the small cap as well as the mid caps. The reason why IWM is also seeing more upside here is because there are also a lot of regional banks, and banks are starting to show weakness. They're starting to show strength in the market, and that is another reason why IWM is also going up. That is because there's a lot of regional banks that are in IWM, which is also propelling the market higher. The sector higher, the ETF or the portfolio. But yeah, so far, as we can see from my S&P 500 stock scanner, a lot of the stocks that are up to date, APA 31.4, the stock is up 5%, COF up 5%, Charter up 4%, URI is up 4%. So a lot of these stocks that you're seeing, most of them are small cap and mid caps. And I think this rotation is going to continue over the next 6 months, where we will see rotation flowing out of the magnificent sevens and then into the small and the mid cap, which are the other 493 stocks within the S&P 500. So it's important to note that we have a massive supply bar on QQQ, and as long as this supply bar remains, which has been defending for 2 days, we had a massive supply bar. And what this supply bar signals is that institutions got out. Institutions ran for the door and rotated elsewhere. And these two candles here prove that, or show that rotation is indeed flowing out of tech and into other sectors, because the institutional candle is being defended by more supply orders, as we can see here from these 2 wicks. So heading into tomorrow's trading session, we will find out if bulls are going to try and eat up this wick and break out and see more upside, or if we are going to continue to see rotation flowing out of tech with another big red bar there, fully breaking down and confirming that bearish breakdown, which in turn will lead to significant downside towards 473 on QQQ stocks. So where is the rotation going to flow out of? Some of these stocks are going to be, one can be Nvidia. So Nvidia basically had a big bearish supply candle, and what happened was we went back down to this support level, and at this support level, bulls did show up with a bullish engulfing, and then they defended that bullish engulfing with another massive demand candle, which we told our team to enter towards this resistance level at 135. Once we tested that resistance level, we had a massive supply candle rejection, signifying that this big supply candle is maintaining its orders, and this is so far confirming the weakness. We are seeing more weakness here in a form of a potential bear flag. So if Nvidia shows more weakness tomorrow and we break below this very key level at 126.88, this can see significant downside towards 118. And if 118 does not hold this time, we can go lower. So if we look at history here, history may not repeat, but it always seems to rhyme. And we had this big supply bar here. And same thing, we came back up, we retested the orders, we absorbed more of the sell orders, and the reaction was just very bearish. We got a bearish supply bar here, and that was followed with more downside towards that support level. Same way here, same way here. So this consolidation is nothing but healthy for the long-term stock, and I would encourage traders to stay away from Nvidia for now. Stay away from Nvidia. Let the contracts basically do its thing. Let this whole phase play out. And once this phase plays out and we see the demand candles return, that's when we are going to come back and trade Nvidia. But until then, so far, candlesticks are telling us that we are seeing overwhelming supply orders on Nvidia, which can put a lot of strain on QQQ's tech sectors. Now let's go over Apple. Although Apple advanced higher and made new historic highs at 237, it is showing overbought levels, and on any sort of weakness, this can see more downside, and this can put a lot of strain on QQQ and further bring the tech sector down. Now, it still shows strength, which is good. But if we look at Microsoft here, Microsoft does not look good. Microsoft had this big bearish supply bar, and bulls tried to counter it with a green candle, but they were not able to engulf it, showing that they are overwhelming the bears. And what happened was that reaction was followed by a big supply bar, and so far that big supply bar is bear flagging. So once we break below 450 on Microsoft, this can really sell off all the way down to where the prior breakout was at 430 area. So around 430 area, around the 50 SMA line, this is where I anticipate Microsoft to possibly get some buyers to show up. Microsoft is known to sell off into earnings as well, so as we saw in the prior one. So this could be the case with Microsoft. Now let's go over Meta. Meta is another tech stock, and same thing with Meta. Now, Meta is not one that I would short because Meta is part of the XLC sector, not part of the XLK, but part of the XLC, which is the communications and streaming. And that particular sector did close green today and could possibly continue to grind higher. Well, it's sort of it's kind of complicated to say that because we are seeing these wicks, but regardless, it does show that buyers are showing up. However, this also signals that bears are overwhelming by selling off and creating these wicks here. So if we do see more weakness, this can really sell off and trigger more selling on streaming stocks as well as communications. So I would stay away from Meta, and I would only react to Meta if I ever see a big demand candle like this where we hold that rising support trend line. So if we see a candle like that on Meta, that's the only way that I will return, with the anticipation that we will break this resistance at 523.38 and then advance higher on this massive bullish ascending formation, which can really trigger some heavy breakout in the market in the stock. So I'm personally bullish on Meta long term, and the reason why I'm bullish is because the stock has been consolidating over the last 5 months here, just going sideways and cooling off. and we are right at the doors of resistance. So we took another test here. We tested it here. This was the origin. This was the establishment phase, and now this is the confirmation. This is where we confirm the resistance. And yes, the rejection has been bearish so far, but bulls are maintaining the higher low structure, showing that demand is higher with each of the sell-off that we are getting. So if bulls do step in with that massive demand bar and they get back above 523.38, then I'm going to be very bullish on Meta towards 600, because I think this is where the stock can advance towards. For now, I will continue to stay away from that stock. But yeah, team, so far the sectors, the rotation seems to be flowing into XLE, into XLF, which is the financials, and then into the industrials, as well as healthcare too. So if we go to XLV, healthcare is also getting some of that rotation, although it sold off and didn't close as strong as energy and XLF and XLI. It is still doing okay. Somehow still closed above the breakout, and we will see how this plays out tomorrow. But yeah, team, so far the S&P 500 is showing a lot of weakness here on the daily chart, and the weakness is coming from tech, because tech is such a big weight. It is also anchoring the S&P 500 from pushing higher. However, if you look at the Dow Jones Industrials and IWM, those two portfolios, ETFs, are not showing that weakness because they don't have a lot of tech stocks in their holding. So this is the reason behind today's weakness in the markets. Now, looking at the S&P 500 here, what are my thoughts? Well, we still closed above that supply candle, which somehow tells me that bulls are still remaining in control. But it is important to be cautious. And the reason why it's important to be cautious is because tech is showing a lot of weakness. So as long as banks and energy continue, as well as industrials continue to show strength, I think the S&P 500 can also continue higher, while QQQ can be red. So the S&P 500, as long as it stays above 561.36, can advance towards the 570s eventually on bank, industrials, as well as energy strength. But I do not feel the same about QQQ. I think QQQ can continue to see rotation outflow, and the rotation will flow into the sectors that we mentioned. So I really would encourage to stay away from QQQ tech stocks for the next, at least for the next 1 to 2 months here. We may be early, so we could get more upside before we see more downside. But I can tell you with confidence that this particular sector is showing a lot of weakness and could see more downside in the following weeks here. That's my analysis for today's session, team. I think small caps will continue to get rotation for the next 6 months, as well as industrials. And that is because those two sectors were cooling off for a long, long time, while the other sectors were leading. So now that the other two sectors are showing weakness, we got small caps and industrials showing strength, and the markets can remain balanced in this way. That concludes my analysis for today. I hope you learned something good, and I hope this analysis helped you. And I will see you all in tomorrow's daily price action show. Take care, everyone.